A preview for the coming week. We thought it would be useful to start today's video with a recap of asset market returns in the previous week. What we saw from global equities was that they increased 2% over the week, and that was led by the US, with the S&P 500 being up about 2.4%. What we saw in the US last week was some strong corporate earnings, particularly from Nvidia, and as we know, they've been at the forefront of this AI theme that we've seen in the US. So that has given investors more hope about the prospects of AI and the returns that could generate for corporates. If we look at credit markets, we've seen that credit spreads have come in, so the price of those bonds have moved up, and that's traded in line with what we've seen in equity markets, which is what we would expect. In terms of government bond markets, gilt over the week, they've been fairly flat, but we've actually seen more substantial moves in the US, with the US Treasury down about 10 basis points for that 10-year note. And in terms of commodities, a place where we've seen investors turn to is gold. Gold was down on the week about 2%, but what we feel about that is positive, which is that it's still acting as a diversifier for us within multi-asset portfolios. So that's what we would expect to see with equities moving up. Gold has slightly decreased, but still acting as that useful diversifier for us. Looking at this week ahead of us, well, the most important place to start with is with trade tensions, and they have seemed to have risen again between the US and also China. Donald Trump has claimed that China has violated one of the big agreements that they had made when they had their meeting in Geneva, whereas China has denied that claim, stating that it will continue to act within its own self-interest. So market participants are viewing that as making any longer-term agreement between the two parties as harder to achieve now. And what we've also seen Trump do is increase the tariff that we're seeing on steel and aluminium imports in the US from its current rate of 25% up to 50%. So it just continues to show that there is volatility within trade tensions between the US and its trading partners, but we'll continue to provide you updates in these videos throughout the week. In terms of other news that market participants will focus on, well, we have the ISMs in the US and the PMI data here in Europe. And what market participants will be looking for is how tariffs are impacting those different subcomponents, such as the prices paid, employment intentions, and the demand environment that we are witnessing. We have the European Central Bank with their interest rate meeting, where they're expected at about a 100% probability to reduce interest rates by 25 basis points. So that's what markets are expecting, for them to decrease the rate from its current 2.25 down to 2. And finally, on Friday at the end of the week, with it being the first Friday of the month, we are going to see the US jobs report, where the market is still expecting the US economy to be adding jobs. So please catch us on Wednesday for our next update.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.